How has the sales tax landscape changed over the last decade?
Well, since the Supreme Court's ruling in Wayfair in June of 2018, that has really opened up the floodgates for states' adoption of economic nexus standards and marketplace laws, which have enabled the states to really broaden the number of taxpayers that they're able to impose sales tax compliance obligations on, both requiring remote sellers, that is, companies without physical presence in a state, which historically had not had an obligation to register and collect sales tax, to now collect sales tax under economic nexus thresholds if their sales exceed those thresholds in a given state. And then also for marketplace facilitators, they too are now deemed under these laws, if they meet the criteria, to be sellers of the merchandise that third-party sellers sell on their platforms. And for purposes of sales tax compliance, the marketplace is considered the seller and has to collect and remit the sales tax.
Wonderful, thank you. Why do you think that so many companies are still struggling with sales tax compliance today?
Well, there are 13,000 state and local jurisdictions. So that's a lot of jurisdictions. It's unlike any other country in the world that has that many possible iterations of sales tax compliance laws, all with their own definitions of what constitutes nexus in doing business, what types of products and services are subject to sales tax, how to file and remit those sales taxes once they're actually collected. And so you've got a lot of laws and definitions and rates that constantly change that companies have to comply with. And that's absent the use of sales tax automation tools. That's just an overly burdensome obligation for any company to try and tackle.
And what exactly would you say are the biggest misconceptions business owners have about sales tax?
Well, I think one has to do with nexus, and that is maybe misunderstanding what the laws are or how they apply to the business. It's pretty common for us to talk with companies that are really grappling with understanding whether or not their sales exceed a state's economic nexus threshold. And in the course of that conversation, we learned that they actually have people, employees, independent contractors on the ground in those states. And that creates physical presence, which trumps any economic nexus that a business may have. So there's misunderstanding around the nexus laws. There's misunderstanding around the definition of whether or not the product that they're selling is a digital good, or is it SaaS, or is it something else completely different. And there's nothing that's one size fits all in sales tax. The rules are extremely complex and they vary from jurisdiction to jurisdiction.
And I think there are a lot of people that own companies that still struggle with understanding what exactly Nexus is. So in its simple terms, what exactly is Nexus?
So Nexus is the connection that has to exist between a jurisdiction, a state, a locality, and the taxpayer before the state has appropriate jurisdiction over that taxpayer, that business, and that business has a sufficient connection to then register to comply with that state's or jurisdiction's sales tax laws. And Nexus has broader application than just sales tax. It is the connection that exists between a jurisdiction and a taxpayer, a business or an individual, that may subject that individual to that jurisdiction's laws, period, whether it's tax laws or other laws. So a good example of this is if I am a business outside the country, and I'm selling products online to people all over the world, including a consumer that's in Illinois, and that product is defective and somehow injures that person in Illinois, that person in Illinois would have sufficient opportunity to file a lawsuit in the Illinois courts against that foreign seller, because that foreign seller, the courts have Nexus over that foreign seller, because that foreign seller, by opening itself up for business and doing business all over the world, has subjected itself to the laws of jurisdictions all over the world.
And how does a company determine that it has Nexus? Is this something that Dillon Tax Consulting can do for them?
It's probably the first thing we do for most businesses that haven't already developed a mature sales tax compliance process. And it's something that we, even if they have that, we routinely do for companies, is reviewing to ensure that even if they have sales tax software that monitors their economic nexus, that their physical presence nexus footprint hasn't changed. And so, as I mentioned, there are really two primary forms in sales tax, two primary forms of nexus. One is physical presence nexus, and that's, do we have people or things in a state, or are we conducting sufficient activity through our own people or through independent contractors that could subject us to the laws of that state by virtue of our physical presence in that state. The other, absent physical presence, you're deemed to be a remote seller and you're subjected to the economic nexus standards of that state. And so under economic nexus, you have to look at whether your sales in a given period, typically a 12-month look-back period, cross over that state's economic nexus threshold, which is often $100,000 in annual sales. And some states that it could be a different number, but 100,000 is the most common example. And some states, even if they have that 100,000 threshold, they have an or, and they'll look at transaction counts. And the most common example of that would be 200 transactions to customers in a state. And so if your average sale price is $5 an item, you could have it at 200 transactions, or $1,000 in sales, you could have economic nexus in the state, even though you're well below that state's $100,000 threshold, if they also have a transaction count threshold.
And you mentioned activities that commonly create nexus. What are examples of those certain activities?
So common ones are having an office in the state, employees in the state, independent contractors that are outwardly focused to the marketplace on your behalf, and they're selling or they're marketing or they're doing training or installation or repair work on behalf of your company. Sufficient that their activities help you to build or maintain a marketplace in that state. Those are common examples. Also, delivering in your own vehicles, sending your trucks into a state to do any activity at all, that could certainly create physical presence nexus. Those are the most common ones.
So how often do you think a company should evaluate their nexus?
Well, it really depends on the company. At a minimum, once a year, but if a company is rapidly growing, it might be much more than that. It might be that we have to look at it every month or every quarter. How rapidly are they growing out their employee base or independent contractor base, where they're sending people, putting, i.e. like feet on the ground quite regularly in new states where they're also selling product or services that might be subject to sales tax. And then that would be something where we'd want to look at it much more regularly than just on an annual basis.
Wonderful, thank you so much.